Hello, here's a new feature on this channel. We'll talk about business and finance news for the month, but since I've been away, we'll look at both January and February 2020. So you may have heard of it, but from the 14th of April 2020, Britons will no longer be able to gamble using credit cards. It's estimated a whopping 24 million adults in Britain gamble. That's almost 1 in every 2 adults. Of those who gamble online using credit cards, over a fifth are classed as problem gamblers, and there are heartbreaking stories of how people have lost almost everything due to their gambling addiction. So why the crackdown on credit cards being used for gambling? Well, the problem is that gambling, as the name implies, means on average you're more likely to lose than win, and that's defined by the odds. When you have people who either do not understand the risk of using credit cards to gamble, or they do understand the risk but are too addicted to prevent themselves from doing it, then you have a segment of population at risk, pretty high risk even. The problem is that many people using a credit card to gamble do not realize that they are tying themselves to 100% certainty of having to pay the debt with interest. But for what? For potentially winning a prize with a 10% chance, let's say? So 100% debt versus a 10% chance of winning. So you can imagine how it makes the problem a lot worse, especially for families who need that money. But now it's a lot worse because they have to pay back debt and interest or risk losing their homes. Onto the China-US trade war, a major step forward in January when a deal was signed between the two countries. So China has agreed to boost US imports by $200 billion above 2017 levels and strengthen intellectual property rules, in particular around counterfeiting and trade secret theft. As a reminder, the trade war started in 2018 when the US imposed $34 billion of tariff on Chinese imports, and China responded similarly. Things escalated quickly with another 3 rounds of tariffs in position on each side, the latest being in June 2019. The US also accused China of devaluing its currency to make Chinese exports more competitive, but let me quickly explain what they mean by devaluation. So typically, exchange rates are determined by the market forces, that is, demand and supply, as buyers and sellers trade in goods and services. Now, they would need to trade in the respective currencies which create the demand and supply for these currencies. Now, most governments around the world hold currency reserves, and by flooding the market with a certain currency, they create oversupply, and that reduces the price. So this currency manipulation usually is frowned upon, as some say it distorts market competitiveness. Under the US definition, currency manipulation is the deliberate effort by a country to influence the exchange rates between its currency and the US dollar to gain an unfair competitive advantage in international trade. Now, these signs of progress seem much needed as China's growth rate reaches the lowest level in 30 years at 6.1%, which is still more than twice that of the leading developed countries. For example, the US growth rate is 2.2% at the moment. Speaking of growth rate, the latest figures for the UK isn't looking too good, with growth rate at 0.1% for the quarter ending last November. With Brexit, the future economic growth remains to be seen. Part of the slowdown is also due to consumer behaviour. The high street shops are in crisis at the moment, and online sales are on the rise. This article talks about how to save the high street. The question here implies that the high street needs to be saved, but to play the devil's advocate here, I'm going to argue that we should look at whether there is a need for it, or actually changes are simply natural part of the evolution process, just like how technology made so many things obsolete. So perhaps we shouldn't let our feelings cloud our judgment. I mean, it's nice having a high street full of different shops, it's visually appealing and makes for a nice walk, but is it really serving its primary purpose? So take an example of the Walkman or the Discman. Do you remember these? Let me know in the comments below. These give me a sense of nostalgia every time I think about it actually, the good old days. but I also have to accept that these things change and now we've moved on. That's not necessarily the end of the high street shops, but the signs are there that they need to reinvent themselves because clearly it's not working. Moving on, household debt comprising of credit cards and personal loans keep on rising. Consumers have been advised to be careful on many buy now and pay later schemes, especially during the recent holiday season. This brings the average household debt to £9,400. It's up by 9%. So high debt levels, as you already know, is risky and can have knock-on effects if consumers struggle to meet their repayment. And these knock-on effects can have a devastating impact on the economy because they're all interconnected. In more recent developments, the impact of the coronavirus is starting to be felt as manufacturing is slowing down and markets have dipped amidst fears of the fallout from this epidemic. The drop of the FTSE 100 was steeper than the 2008 economic recession. Now, people were quick to jump towards the conclusion that the market crash is due to the coronavirus. But if you have been following the events over the past year, you would have noticed a series of events which have been pushing the local and global economy towards a recession. The coronavirus was just the straw that broke the camel's back, although it's a fairly big straw. As a result, we almost certainly expect a fall in global growth rate in the first quarter of 2020. But the outlook for the rest of the year depends on how well the virus is contained and how manufacturing bounces back. I personally believe that the stock market will crash even further and remain low at least for the next 3 months, and therefore have tailored my investment strategy accordingly. So things are looking a bit gloomy, so not the best start of the year, but hopefully it'll get better as the year progresses. That's it from me. I hope you enjoyed the video. Click on the like button and subscribe if you did, and thank you for watching.